Good afternoon, everybody. Welcome to the Traders Week or Trading Week wrap up. Happy International Women's Day to all the ladies out there. Thanks for all that you do. Hope you had a fantastic day. You still have a few more hours to go out and celebrate that one day a year that you get. I was reminded today. I said, well, when's International Men's Day? She says, every other day of the year. So, all right, fine. We'll let you ladies have one day. Cheers to all of you and everybody. Happy Friday. All right, let me get into our show today. Be kind of fun. I'm going to talk some of the high-level stuff that happened. Also going to go into some viewer questions. As you can see by the screen here, I asked AI to show me a sky that's raining down questions. And, of course, came out with a pretty good graphic. I like it. So, whiskey in hand, not wearing the fancy jacket, wearing just a simple little t-shirt today. But let's dive into, I'm going to go into our questions first. Then I'll do a kind of a wrap-up here, as we did have some interesting developments today. Not only with unemployment numbers, but some of the price charts, and particularly digital assets, which have just been absolutely on fire lately. Loving it. So here we go. Question number one. This is could be a lengthy one. Mark F. says, any chance you could explain in more depth on the differences and comparisons of shares outstanding and float in stocks compared to the total supply, max supply of circulating supply in cryptos? I know you've been talking about it a lot lately, but I don't completely understand it. Sure. So let's start off with the stock market first. So when a company goes public, there's all sorts of different requirements and thresholds they have to meet. A lot of times, if it's a bulletin board stock, there's not as many of these financial hurdles that they have to jump over. So if it's a bulletin board or pink sheet stock, they may not have to meet all of these financial thresholds. When you get listed on something like the S&P 500, for example, or get listed on some of the major exchanges, typically they want more of your float public versus the total outstanding shares. That percentage needs to be a greater percentage. But we've seen some with like VinFast, right? Let me just bring up some examples here to show you, and then I'll translate this over into the crypto world so we can understand that one. But apologize, I didn't have a chance to get everything ready for today. Let's go to I think it's VinFast. Yeah, VFS is the ticker I'm looking for. And it's important not just for stocks, but for any asset that has shares available to you or tokens to understand exactly what the distribution of those assets is like. And I'll just go here to statistics. I'm on the Yahoo Finance page. You could use any financial portal, MSN, it doesn't matter. But the point I was making with VinFast is this is just such an insane separation between shares outstanding and float. So again, shares outstanding, hold on, I was trying to make it bigger so you could all see it clearly. Shares outstanding here says 2.34 billion shares outstanding. That means everything that's available that has ever been produced by VinFast. So obviously the board of directors and the executives, they come out and say, okay, well, here's how many shares we're going to issue, and that's what it is. Some of those are kind of held back, whether those are locked in by stock options or just shares that they have kept for themselves during the IPO or when they went public. And most of the time, you get about like a 95% of the total outstanding shares is in the float, meaning most of the shares are out there for you. But look at these numbers here for VinFast. This is really it's almost disturbing. There's only 40 million shares of float, meaning that such a small percentage of the total shares outstanding are actually readily available in the market. So let me just do some math here. I'm going to do... We'll truncate it down just a little bit, but there's 40 million. Actually, I guess I could do it the right way. One sec. I could go click here. We'll go 40 million, just so we'll round up numbers too, and we'll divide that by the total outstanding, which is 2.56 billion. All right, and that equals 1.5%. So if you buy VinFast, you have to know that you're buying out of this tiny, 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 tiny little pool that's available for you and I to buy. So if anybody here wants to buy VinFast, you only have access to 1.5% of the total shares. This is such a big red flag. I cannot stress how horrible this is. Because what it means is the other 98.5% of the shares are held by someone else. And if any moment those could come onto market and dilute all that liquidity, and all of a sudden your shares just plummet in value, because even if they just released another 40 million shares, that's doubling the current amount on the market, your share price should theoretically be cut in half. So I look at something like VinFast, which I remember someone brought this up several months back when it went absolutely parabolic, and I said, "You're crazy to buy this thing. This would be such a stupid investment because you're going to get flooded with inventory later on here." Now, if you look at something like, pick any big company, let's just do Amazon, since I don't think we've looked at Amazon yet for this. Go out to Amazon, and of course they're going to have a lot of shares as well. You have 10.39 billion. All right, so that's a much bigger number overall total, but there's 9.22 available on float, meaning that's how many you can go buy and sell right now. So let's just bring up 9.22 divided by 10.39. That's 88% of all the shares available you can buy and sell from that pool. This makes it much better from a manipulation perspective because what you don't get is as volatile of swings. You can imagine in VinFast, if anybody decides to sell their holding of, let's say, 100 million shares, the price is going to crater. Now, what's good about it, if you're a VinFast, you might ask, well, why would they do that? Why would VinFast just release 1.5 million shares to the public? Well, for whatever reason, the board of directors and the executives there have determined that this allocation of shares for this individual and this individual for the company, whatever, is what they want to keep. Now, if you can create enough attention for your business and you only have 1.5% of your shares public, it's going to create unbelievably volatile swings because if everybody gets excited and tries to buy some of your shares, there's only just a drop in the bucket available for them to buy. This is my argument with Bitcoin, right? Bitcoin, we know there's only going to be 21 million, and the fewer that's on exchanges, meaning all the crypto that's on exchanges, call that your float, because that's where people are going to be buying and selling it. If you take your crypto off the exchanges, you reduce the float, right? Because it's in my possession, I'm not selling it. Therefore, you actually drive prices up over time, and that's one of the usages of it. Let's look at VFS here because I want to highlight that spike they had several months ago. I'll get to that in just a sec, Rob. I actually have you in our comments for today as well. Here's VinFast. John, that's a great point. He says it's basically a private company. It really is. The only thing that's different about this is their financials are public record, right? That, in my opinion, you're exactly right. It's the only difference is that they have to disclose all this financial information. But can you see the problem here? Because if you see a headline on CNBC, if you see a headline on Fox or Yahoo Finance or Bloomberg that's like, VinFast, they're making all these great cars, the average person is going to go, oh, wow, great article. I'll go buy some VinFast. What they don't tell you when someone's on CNBC is like, yeah, VinFast may make some great cars and it might have some potential, but guys, 98.5% of all the shares are privately held. That is a monumental red flag. Who are the big holders of outstanding shares? The owners? Yes, typically it's the owners. Some of it may be locked into like a stop auction. I can't even talk today. It's the whiskey talking. Andre, some of it may be locked into like a stock option program for employees or executives. It may be that the company is just holding on to those shares for selling to expand their factory or infrastructure or whatever the business expansion may be. A lot of times what company will do is they'll actually hold those shares for acquisition purposes, right? So VinFast may go to somebody like Cannoo, who's obviously struggling. We've looked at Cannoo over the past couple days and say, hey, we'll buy you for a billion shares of our company, which gives them a better valuation. Because think about it. If I'm VinFast and I only have 1.5% of all my shares public, I can drive that share price up by creating a little bit of excitement for my company. Because there's such little out there, small demand is going to surge price. So now VinFast shoots up to, let's say, $5 per share. Great. I still have 20 billion shares. So now I can go out there and I can go to Cannoo, which is struggling, and say, hey, I will give you 100 million shares of our stock to buy your company. It's valued at $5 right now. That means we're going to be buying you guys for $500 million. And Cannoo may go, all right, we'll take it. But it's a manipulated valuation. To me, it's almost fraudulent for VinFast to be worth $5 when most of the shares are held by people who created the rules for the share pricing anyway. It's a weird thing. Anyway, that's the start to the question here for you, Mark, is that's your big difference with publicly traded companies. Now, when we transition this over to the digital asset space, one of the things that I teach in my class is it's called tokenomics. It's other than let me go through the hierarchy with cryptocurrencies. When you're evaluating a project, the things you should be looking for. Step number one is, what does this company or what is this project attempting to do? Are they doing something that's unique and groundbreaking? Are they trying to do something that's already been done 100 times over? Or are they a total scam like we've been talking about in this program? There's so many scams out there. It's unbelievable. And some of these scams have bigger valuations than monstrous corporations around the world. Makes no sense whatsoever other than pump and dump, lack of information, lack of education. So number one, what is this project or company trying to do? Once you establish that you like the project, you like the team that's in place, you see the roadmap and you go, okay, I see how they're going to achieve this goal, then your second target is tokenomics. How are they funding all this? Because as I mentioned before, I can, in 7 minutes, create a cryptocurrency with as many tokens as I want. If you want to have 10 tokens, fine, I can do that. You want to have a quadrillion tokens, fine. You want to have 2,847,367, I can do that as well. I can make any amount in 7 minutes. So there's no real valuation there. Where do we find that information? Well, you don't find it at Yahoo Finance. You have to go out to something like CoinMarketCap. And I'll just use, what's a good example? I'll use Ripple as an example because that's one we've talked about quite a bit, but I want you guys to see that. When you think tokenomics, remember there's 3 different ways that companies can perform token structures. Number one is an emission model, which is what Bitcoin does, which is here's a release schedule and it should come out on a little arcing curve. We know exactly how much is going to be produced and when. I like this model the best because there's no uncertainty to it, right? I know exactly how much Bitcoin will be created by July 1st or December 31st. I can calculate the days and get within, maybe 10 or 15 Bitcoin. That's impressive to be able to do that kind of calculation. Same thing for Litecoin and Dash. These proof of work technologies, it's more of a structured approach. When you look at something like Shiba Inu, for example, that has 1 quadrillion of their tokens, they just created them out of thin air. And they could easily, should they want to, create a quadrillion more. So I don't like projects like that are what's called pre-mined, meaning they're all created up front, but it leaves the door open for them to create whatever they want because there is no governance. So they could double the number of tokens, your share price gets dropped in half, and I don't like that kind of manipulation. Now, I haven't seen that where a project has done it because obviously that would piss off all the shareholders or token holders. I know, here we go, Oliver, with Shiba Inu again. It's just because it's such a crazy example of market manipulation and fraud. The third mechanism is where you have an emission schedule, but it opens the door for them to create whatever they want. And that'd be something like Ethereum, right? Ethereum's looking at about 2 Ethereum created every 15 seconds, and then they can create more. So if you decide to buy into any project, I was a new viewer here yesterday who was asking me, tell me about the AI technology companies in crypto. There aren't that many, but let's be honest, right now, all a company has to do is tag AI into their name and people get all excited about it. I've seen it happen multiple times, so be careful. When you do your research, is anybody in here, you guys type into chat any cryptocurrency you want, other than, I don't want to do Bitcoin, Ethereum, do something that might be, one we don't normally talk about. Give me a different crypto. I'll stall for time here and have a sip of my whiskey, but give me one and I'll just do a real quick tokenomic preview of it so you can understand the risks that might be facing that cryptocurrency right now. So I'm not going to deep dive into how to find all the numbers, but one thing when you look at tokenomics, which is how many tokens are there total, that's like shares outstanding, and then how many are available for you and I to buy and sell at this moment, that's float, and those numbers are readily available in the crypto space. The other piece here which is unique is when you have all those, there is actually, it shows you a breakdown of how those tokens are allocated. So typically when a project does an ICO, which stands for initial coin offering, so you have 3. You have initial coin offering, which is ICO, initial exchange offering, which is IEO, and you have an IDO, which is initial decentralized exchange offering. Those are 3 ways that most of these companies will come public. Not public, but bring their tokens to market. When that happens, there is usually a breakdown, like 20% went to developers and 30% were sold to the open market, and our marketing team's getting 10%. So you can see kind of that split down of allocation there, and I think that's an interesting one. All right, I'll do Polygon just because it's there. All right. Now, I don't know the emission structure. I haven't gone through and dug into Polygon. I mean, I know it well, but let's go look at Matic, which is Polygon. It's the 15th largest, so it's doing real good. And this thing's probably going to continue to do good because of what's going on with Ethereum. So let's scroll down here, and you can see total supply is 10 billion Matic tokens, right? You guys got to see that right there. 10 billion. Circulating supply, 9.89. This is great. This is what you want to see. This means that pretty much every Matic token is out there in circulation right now. This is better than what we saw with Amazon. This is like 98% of 99% of all the tokens are circulating right now. This is great. And the reason I say it's great means I don't have to think about that one-off red flag large wallet that's just holding offline, dumping on the market. Now, to be fair, out of this, I don't know all the different wallet addresses, right? I just don't know if there is one wallet that has a lot more than any others, but at least I know all of it is out there. So let me do one thing real quick. I'm just going to go bring you guys back to me so I can bring this piece up here. I'm going to try to remember where all the pieces lie. Let's go to Matic Explorer. So a lot of times you can type in a project, especially if it's on an Ethereum blockchain, which Matic is. You can go here and go to an Explorer, and it will show you, in many cases, the wallets. So you can go see if it has it here. Market cap. Oh, it's not going to give me the largest wallets. Bummer. A lot of them will give you kind of the wallet. Let me see if I can find it here for you. Pending transactions, verified account, tokens, NFTs, resources. It doesn't give me that piece here. But on a lot of them, you can actually go check and see what's the largest wallet holders. And that's important because you want to see, is there one wallet or person who has the most? Is somebody carrying, let's see, top accounts. Here you go. So right here, I've gone, and this is showing the largest Matic wallets. Okay, and right here, I have discovered a monumental red flag. This is so big. This is like going on a date with somebody, and they walk into the room and they've got needle marks all up their arms. They're missing an eyeball. They smell like dog poop, and they've got a bottle of whiskey in the hand. This is a huge red flag for anybody who is into Polygon and Matic. And that is, you guys can see here, 8,764,000 of those, or 64 million of those tokens are in one wallet. That means that 88% of all the tokens reside in this Polygon Matic token wallet. Now, this might be a holding account. I'm not sure. But just the fact that 88% of all of those 10 billion tokens are in one location is problematic, right? That's not good. I don't like when I see even one at 25%. I want to see distribution of wallets. What if this one wallet, for some reason, gets hacked? Then 88% of all those tokens are gone? This is a red flag. So I'm hoping you guys can see that. I just pulled up the Polygon Explorer. It's great that all the tokens are out there, but 88% of them are sitting here. Now, this may be predefined in their white paper. So if you're looking at a project, you go to their white paper, and it may tell you that 88% of the tokens are in this account that is for this specific purpose, and here's how they're being released. That would appease my angst a little bit with this Matic wallet being so large. But again, at first glance, it looks like a massive red flag. Now, let's go back to one that I know, and we've looked at this before, but just so you can see the difference here, if I go to XRP, Ripple, which everybody loves Ripple, it's a number 6 out there. Whose number? Whose number do you need? So here's Ripple. Notice on the left-hand side, its market cap right now is 34 billion. But if all the shares were released, or all the tokens were released, it'd be 62 billion. Because right now, the circulating supply is 54 billion Ripple. But the total max supply is 100 billion. Which means right now that there's 46 billion shares sitting out there. And Ripple Labs owns those 46 billion. So they have like almost half of all the tokens sitting at Ripple Labs, who controls the project. Remember, Ripple is not decentralized. One of my main things I'm always an advocate for in crypto is decentralization. I don't want one entity to control everything. Ripple controls everything. So keep that in mind. They are a centralized entity. Yeah, Margaret, kind of like Float. Yep, and that was the initial discussion, Mark. The question that Mark sent in, which is a great one. You know, we have these calculations for publicly traded companies of here's shares outstanding, here's float. Now we can look at that same basic argument and discussion for cryptos because of their circulating supply. The difference is the regulators on the exchanges, the publicly traded exchanges, are much more aware of what's going on. There is no regulation for crypto at all with regards to token issuance, token distribution. None of that has any sort of oversight at this point. I'm hoping the next 2 or 3 years we will get it to clean up a lot of the garbage that exists today. So I'm hoping that helps Mark understand shares outstanding versus float and why that's so important for you. You know, one thing I will just say for all of you, if you hear about some new up and coming great company, go check shares outstanding and go check float. If the float is a small percentage of shares outstanding, you got it. You know that is risky as heck. Very risky. If the float is about the same number as shares outstanding, good. Doesn't mean it's not risky. It just means that there's no hidden shares that could come flying onto market at any moment and crush your position. You guys good with that? Want me to move on? I hope that helps. Let me have a little sip of this one and we will continue on here. Okay, so that was Mark F's question. I have a whole bunch of small ones. That was a 20-minute discussion. Rob, who was in here today and also sent that question earlier, he says, I see that crypto trades on the CME, Bitcoin and Ethereum trade on the CME. One contract equals 5 Bitcoin. I got to change the tone there a little bit. Does the CME have the ability to create paper Bitcoin, for example, silver, gold on the COMEX? No. So here's the deal. With silver and gold, those are physically deliverable commodities, which means they're actually backed by something. So if you take delivery of a futures contract and you go to first notice date and you actually declare you're going to get delivery of it, that gold can be delivered to you. Now you got to worry about custodial stuff. It's a much bigger picture, but gold actually has gold behind it. The Bitcoin ETF has nothing behind it. There is no Bitcoin representing. So your question says one contract equals 5 Bitcoin. That's kind of not true. It represents the value of 5 Bitcoin. Now, it's called the BRR. It's called the Bitcoin reference rate that the CME uses, and it's actually a very good method. So you guys remember there used to be 2 different Bitcoin futures. There was one on the CBOT, which was actually the first Bitcoin futures product. And then 7 days later, the CME came out with theirs. Now, the CBOT product was much cheaper, and it represented 1 Bitcoin that was quoted to Gemini's price. You guys can see the problem here. If anything happens at Gemini, some manipulation, that's a wonky contract. With the CMEs, it says, here's the value of 5 Bitcoin. And we're not going to choose Gemini or Coinbase or Kraken to get one price. We're going to use them all. So I wanted to bring this up for you guys. I think I have it here somewhere. Let me show it to you. What the price of the Bitcoin future for the CME represents is the value of 5 Bitcoin, but that value comes from multiple locations. It's called the BRR, Bitcoin Reference Rate. And here it is. So they're using quoted prices from Bitfinex, Bitstamp, Coinbase, Itbit, Kraken, OKCoin, Gemini, and LMAX Digital. So they've got, 3, 4, 5, 6, 7, 8 different people giving them quotes and saying, here's our quote for Bitcoin. Why this is such a good method is, let's say that some whale goes to Coinbase and unloads their Bitcoin right now. They unload 50,000 Bitcoin. The price of Bitcoin on Coinbase is going to absolutely go through the floor because remember, each of these exchanges I just referenced is their own market liquidity. They're not connected to each other. So if Coinbase has a huge drop in Bitcoin's price, but the others remain constant, the BRR, the Bitcoin reference rate, will actually cut out Coinbase's as an outlier. So past a certain threshold, they'll go, nope, you don't count. Unless they all did the same thing, then they would keep it. So it's a good reference point. I like the fact on how it's built and knowing that these exchanges aren't just domestic US, right? Coinbase, Kraken, and Gemini are, but OKCoin out of Hong Kong, I don't know, LMAX Digital, Itbit, Bitstamp, Bitfinex. These are all really big. So this is what it's referencing, is the value of 5 Bitcoin on those different exchanges, the average price of all of them. what I don't like about it is it doesn't represent anything. It just represents the value of Bitcoin, but not actual Bitcoin, which is why I've been telling everybody, wait for the Bitcoin ETF to come out. Because now if you're buying the Bitcoin ETF, the spot ETF, you're actually forcing them to buy physical Bitcoin. And that's why we've seen these crypto markets explode, is as soon as that Bitcoin ETF was approved, spot ETF was approved, it just surged. Now the next step would be, once we get an Ethereum ETF, does that now create another leg up for crypto because of the enthusiasm for people buying into Ethereum? So Rob, I hope that made sense. They're not making, it's basically just tracking a price, right? There is no physical delivery of Bitcoin. Now, if they really wanted to do something special, they would create a futures product that was deliverable Bitcoin. Now that would be insane, because where are you going to go get those Bitcoin? And I think that's why they have not done it. They have not done a spot Bitcoin ETF, spot Bitcoin future, deliverable Bitcoin futures. Man, tongue untangled today. Because I think it could create too much volatility. It could create a lot of problems. Imagine you were long 10 contracts of the Bitcoin futures product, and it was a deliverable product, and you got the first notice date, which basically tells the person that you bought that contract from that I want my 5 Bitcoin per contract, therefore that's 50 Bitcoin, you got to go buy and deliver to me. Now all of a sudden you could create massive swings in price. So I think it's probably safer that the futures are not deliverable Bitcoin. That's why we have the Bitcoin ETFs. Okay, did that help, Rob? I'm hoping I answered your question there. Again, I've got just a couple more questions, then I'll go to our charts and do a quick little wrap up here. And again, if you guys have something specific you want to discuss, if you're awfully quiet out there today, let me know and I will. I'll jump on it. So Delphine says GOEV had a reverse stock split, 1 for 23. What does this really mean? Is a reverse stock split good or bad for traders? So, I operate off this mantra that many of you know, which is the trend is your friend until the bend at the end. When something's moving up and its values have gotten so high, like we saw with CMG yesterday, or we see with NVIDIA, at a certain point, what you do is you do a stock split because the price gets so high it becomes unattractive to small investors, because psychologically they go, oh, I'm not going to spend $1,000 per share, but man, if it got back to 100, I'd love it. Okay, they do a 10-for-1 split, same company, same everything, it's just now $10 a share, and there's 10 times more. So if something's trending so much that they do a stock split, typically that means the company is performing very well, and trend is your friend until the bend at the end. So I would continue to think bullishness. Now, that said, I am also a believer of when they declare that they're going to do let's say a 2-for-1 split because it's been trending up so much. If they do a 2-for-1 split, it will rally up until the day they do this split, and then normally the next day it comes crashing back down. And then after a couple days, it'll start to rally back up, but you usually get that big sell-off. Keep that in mind. If something's trending down, as GOEV has been for basically since inception, that's a bad sign, right? It basically tells me that GOEV is most likely going to go bankrupt. Now, how many of you guys know this? What are the rules? At what price can a company become delisted from the NASDAQ, right? At a certain price point, they can be removed from the NASDAQ. So it's in their best interest to stay above that threshold. What price do you guys think that is? Just curious. Type in the chat and get some engagement with me today. So to ask your question, Delphine, a reverse split is bad. It means that the price of this company has gotten so low that it's actually risking being delisted. So they do a reverse split just to keep it safe, just to keep it on the exchanges. So it's actually not a good thing. The probability, it does not mean that price is bound to move back to the upside. It actually means it has the probability to keep on going down. Yeah, it was 5 years ago. The rule is now that if it's under $1 for 30 days, consecutive days. So if it's at under $1 and then it's there for 2 weeks and then jumps back up, it's reset. But if it stays under $1 for 30 days, consecutive days, it will be delisted. So we saw GOEV was sitting at 9 cents, 8 cents, I think. So they did it by a reverse split today of 23 to 1, which means for every 23 shares you had yesterday, you now have 1 today. It's a very weird number. I don't think they should have done a 23 for 1. It just makes odd numbers. But let's go to GOEV. And just so everybody knows, I still am in the camp of I am thinking of buying some of this. I have not pulled the trigger yet because I do believe you're going to see this continue to drift lower. But I do think at some point, someone's going to buy them out. I want to look at the financials. I'm going to have Larry actually help me with this one to look at the actual numbers on this. But this chart looks horrific. I mean, it couldn't get any worse, honestly, than what you're seeing here. Notice now, because the reverse split, it looks like its IPO price back here was $230. Well, it wasn't. Remember, it was 10. But it's just skewed this chart. It means right now that the all-time high on GOEV was $572. And this drives me nuts because new traders all the time look at stuff like this and go, oh, wow, this thing's at $2 and it was at almost 600. Bro, if it just gets to $100, I'm going to be rich. This thing ain't getting to $100, folks. It's not going to happen. Do they still have pink sheets? I think so, Margaret. I've never traded pink sheets. It's just bulletin board stocks, you know. Yeah, just bulletin board stuff is considered called pink sheets. So I still think this one's going to continue down, but I am going to take a chance on it. Probably throw a few grand at it. I've been watching a lot of videos on GOEV. Their product is really cool. It is very different, very modular. It has a lot of real-world applications. It's not designed to be, you know, some cool little hipster car you drive around. It has applications as an ambulance, as delivery vehicles, as a fireman's vehicle, military. I mean, these things, it's got some really cool applications. It's just a question if it can survive financially. I know they've had some issues in the past, but to answer your question, Delphine, a reverse split is not good for traders. It is not. It's not good for it's good for the company because it won't be delisted, but it basically means that price is just in a free fall and getting lower and lower, and to avoid being delisted, they do a reverse split. So typically you only see reverse splits on stocks that are about to be delisted. That's not a good thing. A regular stock split is a good thing because it means valuations are looking real good. Andre says, no wonder NVIDIA announced a split. No. I mean, you look at their share price, it's about time. Did they? Did they go out there and actually fully announce this split? I thought they were doing a share buyback. Unless I can't remember because it's off the top of my head. Oh, yeah. It says primed. Yeah, no, people are asking. They haven't announced anything like that. I mean, here's all your stuff. And it definitely could. I agree with Big Eb here. It's like, they're the next one's to split, and I totally agree. But they haven't announced yet. They will. I'm pretty sure they will. Their share price is just too, gets so lofty. And if you think about it, it's actually a money grab for executives. So anybody who has shares all of a sudden doubles their share, or whatever the split may be. My guess is with NVIDIA, you look at this price chart here, I mean, it had a horrible day today, down 5.5%. But my guess is NVIDIA will probably do a 10-to-1 split. 10-to-1. And why wouldn't they? Because now all of a sudden you're making your shares so much more attractive to small investors. Okay? So what that means here is if they did a 10-for-1 split, NVIDIA would be about $87. My guess is they will do a stock split in the next month. They'll probably make that announcement. Now, they typically do it around earnings, and their next earnings is scheduled for May 22nd. Most likely, it'll happen that day. GE had a reverse split. Yeah, well, GE was struggling too. Not anymore. I mean, GE is looking great. GE would have had a reverse split way back here. Let's see where the splits were. And for those who want to know about splits, TradingView has a really cool feature. I mean, you just scroll over here and look for a little circle that says S at the bottom. Yeah, so they did a reverse split in August of 2021. They did an 8-to-1 reverse split. So for every 8 shares, you got 1 share of GE. And did they do one before that? We could spend a lot of time just looking at splits. But yeah, splits are definitely a very big market mover, and typically they're going to do it when they're undervalued, reverse splits. No problem, Thomasina. Have a great weekend. Hope you do something fun. And again, email me on what you want help with. All right, so I think I answered that question, and let me go into the last one, and then we'll wrap things up. I'll go do a little market analysis and see what we got. Ken says, I was wondering if you know of any good CPAs that have expertise in trader tax status. So I have looked. So there was one, he was called Green Trader Tax or something like that. That's something that OTA was kind of aligned with for a while, and then they stopped, and there was OTA Tax Pros for a while, and I don't know what happened there. I have nobody that I would hang my hat on. I actually asked my tax guy if he was interested, and he's like, I don't want any more clients. I was like, oh, wow, that's good. You're in a good position if you're maxed out and right where you want to be. But yeah, you kind of have to ask around and find out if your tax person is good anyway. I'm sure there's plenty of talk on bulletin boards. I'm very skeptical to bring a tax person on here because it may be viewed as an endorsement for that person. I don't want to do that. I don't like, typically I'm only bringing people on that I think are good, but I don't know. They may not know their stuff as well as they should. They may not be good people. So I'm always skeptical about bringing guests on the program. That's one that always bugs me. But I don't offhand know of any good CPAs. I know you can probably go to Google and type in, trading CPAs, and there will be people that specialize in it. Some of you may have people that you use that you could recommend and share that in chat. That's fine as well. But no, I've been using my CPA since it's his son doing my taxes, but I found the guy years ago and I asked him some very simple questions about traders taxation, and he was able to answer them all and start filling in a lot of other. Try H&R Block. No, don't use H&R Block or TurboTax. Don't use those. What software are you using to keep track of all your trades? I'm using just the reports that are printed out. With crypto, I just keep track of all my purchases, all my sales, and I pay taxes on whatever those gains or losses will be. Well, in this point, gains. So, yeah, I used to really spend hours and hours and hours itemizing all my trades, but now the reporting's good enough. So I just take the reports that are given to me by the different trading companies. With crypto, I kind of have to do my own, unfortunately for now. Why do you think the gold stocks are not doing as good as gold pace? Price gold at all-time highs. Yeah, I'm not sure. We can go look at your gold miners. They've certainly had a huge run because of this, but I think that the rising costs of all the different people, Trader Tax. Oh, Michael Atias. Okay, yeah, he used to be OTA Tax Bros. What's the other bootleg? Liberty Tax. No. Don't go for that. You need something specialized, right? If you are someone who maybe even owns a home, you've got very few things going on, you don't have a lot of investment accounts, then TurboTax, H&R Block, Liberty is going to be great for you. Get Limu Emu if you want, right? Liberty. That's fine. But when you start getting into complexities of I have investment properties and I have income streams coming from this, that, and the other thing, plus I've got all these different trading accounts, it really is important to have somebody that knows all those moving pieces and how they integrate together to optimize things for you. One thing that cracks me up is you're allowed a $500 charitable deduction every year without showing a receipt. Yet a lot of people don't take the deduction. You literally just click the box. Yep, I donated $500 worth of clothes to the Goodwill. Now, I actually do every year because I clean out my closet and I give away a whole bunch of stuff. But why not take it? You just select the box there and take $500 deduction on your income every year, and anybody can do it. It's just a little stupid things like that start to add up, and knowing which accounts to move here or there, that to me is really important. That is why futures are great, Margaret. Absolutely, because you get the preferential tax treatment, right? So the 1256 contract is what a futures contract is called. Is a 1256 contract. You get a 60-40 tax split, so you actually get much better taxes on your gains if you are trading futures. I used TurboTax before I started trading. Yeah, I mean it's easy, right? It's simple, it's easy, but once you get into the complexities, I think trading's a bit different. Wall show rules can be tricky, very tricky, which is why I think it's important to have trader tax status. So I have trader's tax status, so I can buy and sell, no problem. But for many people, if you're going to take a loss on something and then you go buy that stock again within the next couple days or so, you can't write up that loss. It's not good. So there you go, Ken. I'm not much help there with the trader taxation people. What software you use for crypto? I don't. I use just my own spreadsheets. I make my own spreadsheets. I'm not a big fan of paying for software when I know I can do it myself. Plus, I like to have my hands involved with it, getting dirty with it, if you will. All right, let's go and look at what happened in our markets this week. If you guys have any last-minute questions, let me know. I'm going to start things off at the bottom just for today. It's not that bad this week. Crude oil definitely had some volatility. Down for the week. You have a 1.17% slide today. I'm still optimistic that crude oil is going to break above that 80-82 line, which we smacked into, which is the last area of supply before you really start looking at numbers like $89. I mean, that's a long way up there before you start to see kind of an untested level. It's actually not untested, but that $89 area becomes somewhat attractive to me. I don't. I've only bought some crypto. Haven't sold any. I told Michael that I bought. Yeah, with crypto, you only have to. Your only taxable exposure is if you sell it or if you convert something from one to another. So if you were to buy Bitcoin and then convert that into something like Litecoin, you have to pay. You have to pay whatever those gains are or losses. They consider that a taxable event. But if you just bought Bitcoin and you're just holding it, like this year, actually, if you go back to last year, 2023. I didn't sell anything. I didn't sell one crypto, so I have nothing to tax for 2023. I probably won't have anything to tax in 2024 because, as you guys know, I'm really planning on holding all the way through till October or November of 2025. I may actually get out early. I may do my birthday, go October 26th, and unload everything just because it's a milestone date and call that a celebratory thing because I'm pretty sure at that point I'll be doing very, very well. So. Yeah, only taxable when you sell it. If you're holding it forever, no, it's not an issue. Okay, so crude oil, again, the chart, although it was down for the week, still has not made any new lows, so I'm still bullish on crude oil, and I still think it's the most important market to focus on out of our 8 this year. 10-year bond continuing to get lower, right? We saw a drop today of 0.2%, down to 4.079 on the yield. Not looking good. Well, I guess it's all a matter of perspective. In this case, I would like to see this yield move higher. I think the yield curve needs to uninvert, and that would require either the long end of the yield curve rising, which would be this one, or the short end dropping, and we're not going to see that yet. How many years do you get to carry forward your losses in crypto? I don't know. Why, you got a lot, Rob? I'm not sure on that one. I have to talk to the CPA. I'm definitely not a CPA. I just trust him with all those numbers. Don't take a loss, Rob. Don't sell it. Don't take a loss. Remember, if you bought Bitcoin at $69,000 and it dropped all the way down to 15, you could have taken that loss, or you could have just held it. Unless if you're doing mark to market, that's a different one. If you're staking, is there a tax on those gains? That is a very good question. There was a court case where the guy had sued the IRS because they said he had to declare it, and I remember the guy actually won that court case. So if you've earned crypto, let's say you're staking Ethereum and you're earning 3.5% or 4% Ethereum, that's a great question. I am not paying taxes on those distributions as they happen. So let's say, for example, I bought $10,000 worth of Solana. And all my stuff is compounding. So I'm staking my Solana, getting about 8% rate of return per year on it. And let's say about $10,000. And over the next year, the value of Solana has gone up, 30%, but I've also earned 8% more Solana. If I were to sell that lump position, and let's say the account is now $40,000, I'm going to pay taxes on $30,000. So I will include the crypto that was given to me as gains. So ultimately, I will be paying taxes on that because, again, I want no red flags of the IRS. But I don't know whether you have to pay it right away or at the end, but either way, I'm going to pay my taxes on it. Tom says, if I convert US dollar to Canadian funds and convert back to US dollars later when rates are better, is that taxable or does that just go for crypto? It's considered a gain. It's a capital gain, right? If you took dollars and you bought Canadian dollars and that position gained 30% and you sold it back to dollars, that's a taxable event. It's like a Forex trade, right? So yeah. Now, let's be honest, Tom, if you went across the border to Canada, bought $100,000 worth of Canadian dollars in cash and you're just sitting on it and no one knows, well, you're going to report that? You should, technically, but would you? Now, if you're doing through an exchange who might be reporting all this to the IRS, damn well you better report that. So, yeah, that's a taxable event. Going up the list, that was our 10-year. Again, I still like the fact it's making higher lows because in a normal, healthy market, this should go up, but we'll see. NASDAQ down 0.1% today, but look at the pattern, guys. This is really an ominous looking thing. It's almost what's called a dark cloud cover formation. What that means is you've got this incredibly bullish run. We gap up today. make all-time highs yet again, and then all of a sudden that unemployment number came out and just boom, crushed this. Look at the price chart of it. It just came screaming down the moment that was released. There you go, 6:30 this morning. It actually had a knee-jerk reaction. Looks like it shot up and then just boom, absolutely fell apart based off of that announcement. So this is not a good-looking chart. You literally closed at the dead lows of the day on that NASDAQ. Let me go back to our daily here. This is actually very bad for the market going forward. It's still in an uptrend, still looks great. I'm not freaking out, nor should you. But I'll tell you, if we start to get below these lows we established a couple weeks ago, which is about 17,830, then you might want to start thinking about putting on that bearish hat. Did you cover it today? I did not. No, didn't cover that one yet. So there's your NASDAQ. Dollar index, you got almost a hammer formation down to this area of consolidation that goes back into January. This is nice. A pullback right into an area of demand. Man, this has the potential here to have a rip up next week. I will be watching this one. Again, a rip up in the dollar means most likely those equity markets might sell off, and we'll get to the S&P in a second. This could be a correction coming here. You have a big, almost shooting star on the Russell 2000 as well. Now, you had this breakout. We've been talking about this ascending triangle, which I think looks really good. It ripped through it. Everything was great. And all of a sudden, that unemployment number, boom, caused people to freak out a little bit here and closing near the session low. So this is a pretty interesting pattern as well for a correction starting maybe as futures open Sunday night going into Monday morning. Podium time. S&P was up 0.6%, but look at that. That is a giant shooting star. Some might call that, I joke and I call that a comet, the comet formation. But let's just do this. I'm going to get rid of some of these red lines here because I don't want to overpopulate the charts. I'm going to put a low right across the low of today for the S&P futures, which is right at a low of 5,185 and a quarter. If we open up above that and then rip down, get your short guns out and start firing away because you could have a pretty significant down move. This is a gap. It's a frozen part here after a big rally. We could get what's called an abandoned baby, which is basically where it just gaps down lower and just keeps selling off. So we'll see what happens starting on Monday with this, but I'm very curious to see how this is going to perform. Both very bearish for the S&P, the Russell, and the NASDAQ. I didn't look at the Dow, but there's your Dow formation. Same thing. Right, you've got this kind of island of price out there on a big gap up. That is not good. Let's look at other markets. Commodities. Oh, man, look at that. On that breakout, we talked about gold hitting blue skies and having kind of uncharted territory here. Boy, isn't that awesome? Fantastic. Great move out. From the breakout of this move, which is roughly here, to where we close today, you've had a 4.8% move in gold this week. 4.8%. Great. Love it. I'm not long the ETF, or I'm just long on physical gold. But that also did well for SLV. I mean, we've had a great week here for silver as well. Silver coming up into some overhead supply issues right around 22.50, which is why I sold my calls there. I sold calls against part of my position at 22.50. The other part is at 23. Again, my options expire next Friday. So great. Collect that premium. Ideally, I would love it if silver just closed at $22.49 next Friday, and then I will sell those calls at a much higher price because I do think silver is going to continue to rally. If we see a significant amount of pain in the equity markets, I expect silver to challenge 23 and maybe even eclipse it. So keep your eye on that one. And finally, back on the hot seat, 69,805. You have an all-time closing high for Bitcoin this week. Fantastic. Up 2.11%. Let's look at the spot market here, which I think is a better representation. Man, and some of these other cryptos I've been talking about, man, just doing fantastic. There you go. Your all-time closing high of Bitcoin. Earlier today, you did see the spot price of Bitcoin get over 70,000, which it has never been there before. It's looking pretty good. Now, I have to look at this one. You guys, I've talked about, I'm always giving grief to what I call shitcoiners, which are people that are peddling meme coins and, Doge and Shiba and all these. There's hundreds of others. And I'm saying find projects that actually do something. And we've talked about Render, but one of mine, I think I've mentioned to you guys before, was LivePeer. Check out LivePeer has been absolutely on fire. It's up 45% today. Just in the last 4 trading sessions, from this low point here on Tuesday to where we closed today, up 108%. Now, if you go back to these low points that were back in early January, 296% move up for LivePeer, and they actually have a service. They're actually doing something. Render as well was doing very well. It's just been a phenomenal run here. Cast out 60% of Bitcoin. What do you mean cast out 60% of Bitcoin? Curious. Doesn't a shooting star have to have a body less than? Yeah, no, technically I think less. If you look at the shooting star formation, it really needs to close in the bottom end of the range. Like the bottom third is kind of the textbook. So this really wouldn't be a shooting star, right? Okay. Why? I wouldn't cash out. I would hold it. I would definitely hold it. So would this technically be a shooting star? Less? No. What do you call it? I mean, it's the same basic principle, right? We opened up here. We were a green candle at one point, making all-time highs, and then all of a sudden came screaming back down and closed right near the low. So you are correct, Les. This technically is not a shooting star. What the hell do you call it? Right? This is a bearish candle formation, and again, I'm going to treat it exactly the same. I apologize for calling it a shooting star. You're right, it is not. But if you look there, man, again, I think S&P could be a great potential short next week if it gets below 51.88. Are these projects making money? Do they report these earnings? No, they do not. And that's, again, one of the big problems I have with crypto is if you buy that share of LivePeer, you're not getting any earnings. You're not getting any of that stuff. No, there is no, you don't get a share of revenue. It's not like a publicly traded company. When you buy a share of Apple, you get a small percent. You get one share worth of earnings. That's how it works. So, yeah, crypto is definitely very different in that regards. But what LivePeer is doing is just doing decentralized streaming. You can now stream concerts and videos, and if you want to stream your own band or whatever, you can do that at 1/50th the cost of using something like Amazon Web Services or Vimeo. That's appealing, and those that are making money on it are the ones that are allowing people to use their facilities. I may actually look at setting up this computer that I'm broadcasting on when I'm done broadcasting and let people use LivePeer on my computer, and I get paid in LivePeer. And the reason for that is I have a very good video card, I've got fantastic bandwidth, and a great powerful computer. So phenomenal. Let's earn money that way. And the more people that use this system, the more it drives up the price of LivePeer, which is what's happening. You're seeing now people going, hey, this is a great service. So same thing with Render, right? Render is now in much more demand because of Apple and some of those services like that. All right, let's see. Tom says, it was normal in Michigan to go into Canada for a day or a few. I never reported taxable amount. Yeah, we bring back, oh, yeah, that doesn't count. That's small pennies. When you're dealing with hundreds of thousands of dollars, then it's a difference. Why is NASDAQ rallying as Apple, Tesla, and Google fail? Is there a broadening of the rally? Well, I keep remembering, I'm going to move this account over. So take a peek at the NASDAQ. What time I got? Oh, no, we're not doing an hour show, everybody. Don't even try to get me in there. If you look at the chart of NASDAQ going back to late 2023, it's been just fantastic and moving up. Okay, so obviously Apple is the big culprit here in slowing down the markets. It's not just the Magnificent Seven, but I'm going to run through the top here, Apple being one of the biggest position pieces, Microsoft as well. But remember, Microsoft hasn't sold off. We've got that line at 398.21. Until it gets below 398.21, there's no reason to think that Microsoft is going to drag this thing down. If it does get below that, guys, buckle up. It could really be a problem. And now let's go to, Michael says, I sold 12 Bitcoin, bought them at 5,000. So you bought $60,000 worth, and now you have roughly $750,000 worth. You've got a taxable event on your hands, man. Be careful where you sold those at and where you cashed out, because Uncle Sam's going to want their share. Definitely with the transaction that large. But congrats, good for you. I would have held it myself for another year, but all right. There's Microsoft. Let's go to Amazon. And I'm just showing the big ones here. Notice, not all are showing weakness. Apple is. But here you have Amazon. Amazon's holding right at those all-time highs. I mean, this looks fantastic. Meta, all-time highs. So it's only Apple really that's looking bad, and Google. Let's be honest here. Google has been looking pretty weak. Although I think if Google hasn't found its bottom yet, I think it's going to find a bottom here soon. I was actually thinking about selling some puts on this down at 124, but I have not done so. I may do next week, but we'll have to wait and see. Yeah, thanks, Gio. Yeah, for those of you who are new, welcome. I see I got some new names here. Welcome to the program. Try to be as interactive as possible, and I'll try to get to everybody's questions. If you are new, hit the subscribe button. If you like it, hit that like. If you don't like it, then just email me on the screen here at TraderMerlin@gmail.com and tell me why you didn't like the program, as opposed to being a coward and slamming. I hate when we get trolls that just slam people for no reason. It's like, you could just communicate and make things better. Life's that way. Let's just communicate, make it better. Anyway, that is your top 8. Again, I'm going to keep saying this till the end of the year. I think the most important thing to watch from a broader market perspective is this one right here. It's crude oil, and we'll see what happens. If that number keeps rallying up, we're going to get more pressure on the markets and might change the perspective of the Fed and their rate cuts. Now, I did look at the rate cut schedule earlier, so let me go and show you that. I think I had it right here. We're seeing the probability of rate cuts deteriorate. It's getting lighter and lighter and lighter going into the end of the year. So initially, it was supposed to be March. March was like, oh, we're going to get rate cuts. Right now, 97% chance that we are not going to get a rate cut. If you look at May, which when everybody really was thinking, that's pretty much off the table now. It's gone from a 50% chance of a rate cut not happening. It is now 28% chance of a rate cut. So right now, it appears that the speculation is now focused on June. I think that that's the earliest that we will see a rate cut, and I'm still not convinced. I still think inflation is going to be a topic into June and July and August of this year. But right now, you got a 53% chance of a 25% rate cut by then. So there we go. As far as markets go, I don't have anything on the economic calendar to talk. We didn't look at economic data, so let me just real quickly bring that piece up here because the unemployment rate came out today, and I mentioned there's really nothing to worry about with unemployment until we get, in my opinion, 4.5%. However, you look at the number here, we jumped from 3.7 to 3.9. And on the grand scheme of things, no big deal. No big deal. But let's zoom in, right? You notice when we zoom in, it does show that it has been getting higher over the past, 6-8 months. But it's not like astoundingly high. For me, again, 4.5%, that's kind of a number that in my mind would be a significant one. Once we get above that, then I think we might have some problems for our markets going forward. But now that was your major piece for today. You did some non-farm employment change. Notice the average hourly earnings. They increased, but nowhere near what they have been, showing less money coming into spenders' hands. That is not a good thing as well. So that's pretty much it. Let's show you what's happening on Monday. Again, John O'Donnell will be our guest on Monday. The 11th of March, you can see here for the U.S., I've got nothing cooking. Really no big deal for Monday. And there's a couple small little earnings things, but I can't remember off the top of my head. Not that worried about it. All right, let me see. What time is it? I got 2 minutes. So Tom says Google has a huge event coming in June. When cookies are eliminated and Chrome advertisers will feel like they're driving blind and may reduce ad spending. Yeah, I want to look more into that, Tom, to see what the impact might be. And maybe that's part of the reason we're seeing that sell-off now with Google as opposed to just the AI blunder they had with their Gemini program. We'll see. Don't know. I still think Google has such a dominant market share that buying pullbacks into demand would probably be a good one. So that's going to do it for me, everybody. Cheers. Hope you had a fantastic trading week. I know I did. I had a great trading week. I had some new positions put on, so feeling happy about that. And hopefully next week, I have a bunch of different put positions that I sold. I'm hoping those all expire worthless by next Friday, but we'll keep you guys up to date on those as how they perform. So cheers. Have a fantastic weekend. If you have something that you guys would like me to discuss next week or questions for John O'Donnell on Monday's show, you can email me at TraderMerlin@gmail.com or put them down below any of the YouTube videos. It's not a 1 hour show yet, Pepe. I still have about 3 seconds left. And on that note, I'm out, guys. Have a great weekend. Cheers.